Well, it's been a favorite topic of mine and on this show for a long time. And, well, it's been slowly happening. It really, maybe now the housing sector does feel like it's got some authentic momentum behind it. Now, this morning we saw the merger of Ryland and Standard Pacific, and then really huge news on home builder confidence. Now, the headline number read 59 from 54. That was really encouraging, but most encouraging was the news out of single-family homes. The index there went to 65 from 58. Expectations, that's for the next 6 months, 69 from 63. And traffic is up nicely, 44 from 39. Now, in addition to economic headwinds, of course, we know that there's been a major shift in attitudes about home ownership. The industry also dealing with legislative involvement as well. Today, the California Supreme Court, just not too long ago, ruled unanimously that cities and counties there may actually require developers to provide below market housing as a condition for new housing permits. All right, Steve, you got some red meat there for you. I don't know if you're still bearish or not on this, but we've struggled a lot. Home building, home ownership is a critical component of our economy. Feels like it's starting to come on.
No, listen, I think things are getting better. I'm no longer bearish, neutral on the sector. And by the way, the sector's gone nowhere for the last 3 months. If you look at the XHB, for instance, housing has just been a snoozer. And most of the market has, to be fair, so I'm not just picking on housing. But long term, is housing, is it getting better? Yes. Is it going gangbusters? No. And I think the biggest thing is, you just mentioned it, the biggest factor here is the change in mindset among millennials. Look, when I graduated from college, I had no money. I had to live at home for a couple of months, and I was utterly ashamed of that. I was sleeping in a bunk bed with a Cheryl Tiegs poster from the 1970s still on the wall. Mom was cooking dinner. That part was great, but I was ashamed to be at home. I don't think that's the case now for 20-somethings. I think they're fairly content to hang out at home for a while, be a barista at Starbucks with a political science degree from University of wherever, and try to pay their student loans. And so there is a structural shift that's gone on, again, largely because of government policy, which is a shame. But is housing ever going to get gangbusters again? I don't think in our generation.
Well, here's the thing, Matt. They do say, though, that millennials are starting to come around. They just waited longer, and they wanted to do this they wanted experiences. For whatever reason, this particular generation values experiences more so than saving up a bunch of money to buy a house that may go up in value 20 years from now. But maybe they're coming around.
Well, they're going to be forced to do it eventually. They like to do their experiences between, let's say, 21 and 25 instead of saving money for those 3 years to buy your first home, instead of just doing a bit later. And all the studies are showing that the millennials that are in their later 20s are getting there. They're just starting the family formation a bit later. So I disagree, Steve. I think longer term we're set up for a much better situation because things are just starting a bit later, and the trend has been improving for the last 5 years, slowly be it, but yes, it will be getting better.
What's a stock that people should buy?
A new one we put out today, we bought today, LGI Homes, LGIH. It's a small home builder, but PEG ratio 0.48, forward PE ratio below 7.
What do you think, Hillary?
Buy Hovnanian, H-O-V. This is a home builder based in New Jersey. But
aren't they having some trouble? The stock's come down a lot.
The stock has come down, but I highly recommend it, especially now that we're seeing these mergers taking place. It makes a lot of sense to be in Hovnanian because the financial industry, the housing, New Jersey, Connecticut, greater New York area, you want to be in a company that's serving and building homes for those who are going to benefit from
Real quick, Steve, did you have an idea in this play, even though you're neutral?
No. I do, and I'm neutral here, but you know where I'm not neutral is the REITs. And I think interest rates are going to stay low. REITs have been killed over the last 3 months. So I think IYR, just D, all of the above. I don't want to pick a particular REIT, but I think the real estate space in general is due to rally because rates are going to stay low.
We'll leave it there. And of course, Steve was a contrarian even as a kid. Everyone else had Farrah Fawcett. He had Cheryl Tiegs.